20 seconds, 25 seconds. Trying to get a tilt up here. Ten seconds. Call 36. Long at 36. Dollar index is coming down. Go with a 1p target today at 77. Go ahead and move to break even here. Locking in 40, 66, locking in 30 ticks here. And out, plus 41. $2p today is 82. Got to negotiate the $100 a barrel mark though, so I wanted to be out in front of that on one contract. 99.36 plus 0.82 is 100.18. Here's an interesting thing that I was reading in long-term secrets to how's that go again? Long-term something. Yeah, long-term secrets to short-term trading. I haven't physically done the testing on it, but Larry Williams was talking about kind of like a buy and hold to close type of thing. When you find something that you have, one and done. Yeah. Yeah. I've been reading about how we can apply that. I don't think you can really apply it until you're trading multiple contracts to be able to apply any of Larry Williams' type of logic and strategies to it, because obviously he trades with a lot more size and volume when he gets into a market. And being able trying to hold on to something like that and having it turn against you, that's tough for just about every trader until you take some profits along the ride a little bit. And when I wrote some notes here, I was writing. See if I can find my notes that I wrote down when I was thinking about some of the stuff that I had read from him. I think it was chapter 3 of his book, Long-Term Secrets to Short-Term Trading. If you don't have that book and you'd like to have a copy of it, I do have an ebook copy of it. I'd be willing to share with you until you got a copy of your own. Just fire me off an email and I'll get it to you. But chapter 3 was kind of interesting when he talked about long range days, and you start seeing everybody always talks about the same thing. How do you determine ranges and so forth, and that's kind of how I kind of stumbled in on it too. Not because I thought about Larry Williams, but just started thinking about the markets of moving and ranges and so forth, and how do you determine that? Now I use the a normal distribution curve to help determine statistically how far a market can move, to help me out before I think it would have a turnaround. So I've defined that kind of like the 1R 1P area before I determine a turnaround can happen. So being able to capture that profit in. So anyway, so I wrote this when I was reading some of my notes, and I started underlining some things that I read for him. Like for instance, he says successful traders know that a market can move only so far in 1 minute, that a market can move further in 5 minutes, even more in 60 minutes, and a heck of a lot more in a day or a week. Losing traders want to trade in a very short time frame and thus automatically limit their profit potential. So, yeah, he obviously doesn't really think too highly of day traders, so he never has for a long time. He goes on to talk about that he's invested every year on the latest greatest, and they haven't been able to perform. So anyway, so then I went on and I wrote in my notes here, along with what else I wrote. I said, long range days will capture the serious money. Never forget that rule. That's from him. And we've kind of figured that. I figured it out in terms of ADR, UADR, LADR, how far a range can move. And I was just reading his book. I had never read the book, thoroughly. I just had read it years ago, and I pulled it out just this week. And on Monday, I started reading it again, and I had got to his. I think it was one chapter called "Secret of His Success," and I forget where I wrote down some notes on that. I'd have to go hunt it down. But then he also talks about, most of all, you should have learned to hold on to winners to the end of time frame you are trading. Key to Larry, and then I had wrote down here, key to Larry Williams' success: large range days and holding to close of day. So, and I had asterisk that and starred it and so forth and highlighted it. And I said, and then I had wrote in my own notes here, how do I apply my rabbit theory to capture the large range trading days? In other words, 3 standard deviations or more, which will happen 5% of the time in any given day. And I had wrote down in my notes here, can this be done trading 2 contracts rabbit to close? My notes. What do I know about trading crude oil is capturing 100 ticks or more is very rare, as this market fluctuates and moves in a haphazard, unpredictable way, but occasionally the market will reward the trader with a very large range day. Can you statistically figure out the odds for this kind of day as we continue to have short range trading days? In other words, what he means by range is the same thing as we talk about. They talk about spread. Think about when Larry Williams talks about range, we talk about spread part of volume spread analysis. Oh, we have an exit signal here. Plus 10 ticks today, be 44. Minus 10 ticks, excuse me, not plus. 44 exit on this trade right now. Or you can hold it break even. I think what break even was 36. I actually looked at this bar right here, and that's the bar I judged to get in right here. This bar was 34. I figured if we could get above that 34 and get above, we were traded just about at the trend line right there. It looked like it was getting ready to shoot out of the box. That's why I jumped in the market. A gut feeling, trading with your gut, right? Trading from your gut. Now, I don't know. I don't really call it gut as much as intuition. After you get, I forget which trader or whoever said that. I think even Larry Williams has said that you should master one market before you move on to another.